Good morning. Welcome to the SEAF model. I'm Jack Kosar. This is effective for the week of January 5th, 2026. Let's get started. Starting off with Happy New Year. First Beyond the SEAF model for this year. And we get a nice, unique one. Most of all of our sectors are sitting here in neutral. And the two sectors that are in favor are a little bit on the higher end in terms of the ranking. And I don't mean higher as in better, but higher as in the number is higher. And not really seeing that super strong leading sector that we would like to see when we're trading the SEAF model. But SEAF model doesn't give us what we like to see, just produces the numbers for us. So what we have for our SEAF signals for this week, retain industrials. We have communication services and utilities here. Utilities coming in with strength on the trading week and the strategic quarter. Communication services showing that nice positive correlation that we like to see from 6 to 4 to 2. And industrials really being held up by its tactical month and strategic quarter, showing a little bit of a weak trading week. At our bottom of our model here, we have financials and technology, both being held out of the avoid. Financials with a strong tactical month and technology with a strong strategic quarter. Heading into our heat map. This is what I like to refer to as a Picasso painting. We have colors and everything all over the place, not really showing any kind of trend. What does that mean for us? Typically, when the SEAF model's heat map looks like this, and subsequently on weak flows that we'll address in just a second, we're at a bit of an inflection point. The market does not necessarily know where to go or where to put the money. So money is kind of getting tossed haphazardly across the 11 sector spiders in order to try to figure out what that next major trend is. Energy coming in as the top on week, trading week with a 0.16, which is not very heavy, and even technology as the worst, coming in with a negative 0.18. So we're not really seeing any kind of strong flows here on the trading week, and even accumulations down, going for the tactical month and the strategic quarter. Very much in flux here in terms of what the map is saying. Overall, we were down negative 0.9% last week in terms of overall sector spiders, in terms of coming down. Note the market is up today, so we'll be interested to see how that reverses. 3 of the 4 days were down last week, though Friday was up a bit, saving us from being down 1% last week. And again, yeah, just overall weakness in flows tends to show a little bit of an inflection point for the broader market when we see a SEAF model kind of align like this. Looking over into our sector spider AUM, as I mentioned, we were down AUM last week. That dropped us below the 21-day moving average, but we are very close to it. So we haven't had that distinctive major drop below that 21-day moving average. Right now, it's appearing it's going to be a slight little check mark versus a directing trend. But again, we don't know. We're not projecting our cash flows here for SEAF. What we are doing here is just tracking the assets under management this is in this case the total 11 sector spiders as a singular number. Now, when we stay below this 21-day moving average, we tend to have price depreciation in the S&P 500. As you can see here, we're in a little bit of a slight decline, but again, we are up 55 today as of the taping of this, subject to change depending on when you're actually watching this video, but showing a little bit of weakness in total assets under management as we are bumping up against the kind of the all-time high here for the total AUM in the 11 sector spiders. Heading into our rainbow charts, technology. Technology is currently ranked the worst out of the 11 sector spiders for our SEAF model, but it is still in neutral. We are a little bit of a sideways pattern for technology. We just kind of up into favored and kind of tapered off. Again, we'll see how this thing progresses, but as of right now, we're sitting in that neutral time frame. But I wanted to highlight, even though that technology was ranked the worst on the trading week, second worst on the trading month, we are sitting still in neutral and a little bit of in a sideways pattern. Again, normally when we're seeing these sectors hit the bottom part of the SEAF SEAF map, there tend to be in a deep avoid, and we tend to see a real downward trend to the relative outperformance versus SPY. We are not seeing that right now. So, kind of taking the current week with a grain of salt, as not a lot of strong asset flows coming in or out of the 11 sector spiders. Communication services has been flirting with favored. We did dip a little bit into the neutral avoid here for a hot sec, but overall in that favored, back into low favored, has a nice steady little uptrend into the relative performance versus SPY going back to November, and we're starting to kind of point upward. So communication services looks to be a positive place to be as of right now, sitting in that. As I've mentioned before, I like to see that positive skew. When even in low asset flow environments, just because we kind of see it go from negative to positive to a growing positive. So although the assets were light, the positive skew does make out good for communication services. It's a nice thing to see, and it's kind of confirmed here by that relative outperformance trend. As these things start to kind of shift upwards, as we see that positive skew, we kind of start to see this thing take off. Now, if we start to see some stronger flows, and, communication services in the past, not really for the past year, but in the past has been something of a leader with its upward tech bias for its major cap stocks. So this could be an emerging leader if this thing does end up taking off and we get in this upper favored territory. Industrials, we've had some nice periodic runs in industrials going back for the year of 2025. Had a nice little run up going in through December. We've given a little bit of that back, but we've still stayed in that favored, which means asset flows are holding on enough. Again, we were 8 on the trading week, but that was a near zero number for industrials. Still has a bit of accumulation in the strategic and the tactical month. We'll have to wait and see here. For industrials, can we take that next leg up over and kind of get back up into that upper favored and turn this baby around? As of right now, a little bit sideways as we've kind of middled here in this middle favorite here for industrials. Utilities kind of bumping its way into the top 3, a bit sitting in neutral, just under favored. Appears to be sitting at a bottom here on the relative performance versus SPY. If this thing does end up taking off from here, this would be a good buy point in terms of it's kind of buying off the bottom on the relative performance versus SPY metric of this chart. If we could take off from here, we will need some stronger flows. Like I said, near zero, even at the number 3 spot, 0.07 on the trading week. So not a lot of strength coming into this, but again, next week, some more accumulation and flows. The market starts to figure out itself from this tactical point that we're at, this decision point that we're at. It could be a good launching point for utilities. And I just want to bring up energy. Energy was first on the trading week. Does have that positive skew a bit aggressively so, from 9 to 7 to 1. But energy showing up on the trading week, very much in a sideways pattern here on the relative outperformance versus SPY. Really nothing to do here yet. I would like to see this get up into favored and break through what is relatively strong resistance on the relative performance chart. Just really have gone nowhere as we've kind of fluctuated up and down here into the favored and neutral. Energy will be a place to watch with the recent geopolitical issues with Venezuela. So just, we're going to keep an eye on energy probably for the next couple of weeks, regardless of whether it's a SEAF signal or not, just so we can kind of track how this relative outperformance is doing and how the SEAF model is kind of tracking energy as a whole. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.